Want to see someone systematically disprove everything you have read about trading stocks and expose how and why you will consistently lose money if you aren't doing it right? Click the link in the description to check it out for yourself. But now for today's video.
The question, how do you search for stocks? Answer by Mattis Kabbalah. I am a long-term investor, so I search for stocks that will be worth multiples of my purchase price several years from now. I use screeners on Finviz, Marketinout and Stockrow every day to narrow down my list of opportunities. There are two kinds of companies I am primarily interested in: established and profitable companies. These are businesses which have a history of strong profitability, steady growth and a healthy balance sheet. They might be very small companies, $200 mil market cap, or larger ones, $10 billion and more. It is quite surprising, but there are many cases when they are overlooked and undervalued due to short-term problems or sector weakness. So these are companies with established market positions, strong competitive advantages and run by exceptional managers. They must have potential for further organic revenue growth, not EPS growth by cost-cutting or expansion through acquisitions, otherwise I won't buy them. Just because they were growing in the past 3, 5 or 10 years doesn't mean it will continue, so I need to be sure of their potential. The screening criteria are simple: revenue growth of 10% or more, last quarter; EPS growth of 15% or more, last quarter; ROE above 15%, TTM; debt/equity below 1, new 52-week high; 2. Fast-growing companies that are investing in the future. Here I look for businesses that are unprofitable or with very low earnings, but that are investing in their growth. It might be a new technology or a software company that is acquiring customers at a fast pace, so margins will be low or negative. Best time to buy such companies is when they are still at the beginning of their growth phase and when traditional financial metrics look bad. When there is a large untapped opportunity, the company should use all available resources to seize it. In some cases it's a winner-takes-all market, so it's important to move swiftly. I invested into Shopify, SHOP, Alarm.com, ALRM, Upfolio, APPF, and many others this way. The screening criteria are simple: revenue growth of 25% or more, last quarter; debt/equity below 1, new 52-week high. This is the primary way I look for great stocks. It's just the first filter, and there are many other things I look at after the screener narrows it down to a handful of companies. Hope it helps. Answer by Phil Newton, A2A. Firstly, I'm a short-term swing trader, which will color how I look for stocks. Secondly, I no longer have any inclination to spend any more time than absolutely necessary looking for stocks. Finally, I only want to look at what I could trade today and worry about what I might trade tomorrow some other time. I also want to be done and dusted in 30 minutes or less. Zoom in on today's stocks today. Step 1. The first and most important step is to take a big list of stocks to a small list of stocks. I have a small universe of what I consider the best stocks to trade, which I pull my daily selections from. The way I speed things up dramatically is to mechanize some elements of my selection process, which is easy to do. Pick your criteria which can be mechanized, then rank and sort those criteria in a watch list. Basically, place your preferred tool or criteria in a watch list. Example: I like to look for prices to move to a Bollinger Band extreme. Using the %B version of the tool, I can rank all the stocks compared to the Bollinger Band. Looking for stocks that have closed outside the Bollinger Band will having me a daily short list. A full and complete strategy outline is here. How to find the best stocks to trade today, every day on demand. Doing this short listing allows me to scan for stocks and gives me a daily short list of stocks to look at. Step 2. Zoom in on today's stocks today. What I can further do is shortlist the shortlisted stocks by looking for a large wick on the candle in the last completed candle. I have a tool coded up that simply looks for a big spike and a small body, ideally with 2/3 to 1/3 ratio of spike to body. Step 3. Visual inspection. This is when I can check for those elements which may not always be fully automated but easy to check with a quick visual check. Final thoughts. The logic behind this scan is that I zoom in on what I'm likely to trade today. This can be done in literally a few clicks and should not take more than a few minutes to find 35 stocks which can be inspected. This means you can find something to trade every day without flicking through hundreds of charts and focus on what could be traded today. There are no excuses to not be able to find something to trade every day. Answer by Stefan Rufer. It depends on your selection strategy. Here is mine. Trend following strategy. Only stocks that are listed in an index. Trigger criteria that can be found with a simple algorithm. Here's how I do it. Choose a pool of stocks, for example the components of the S&P 500 index. Decide on the selection criteria, e.g. stock should be in an uptrend and a crossover of the short-term and long-term moving average curves should have occurred within the last 13 weeks. Build a spreadsheet that loads historical stock prices of your stock pool. Add formula to filter for stocks that match the selection criteria. You can use Google Sheets for that, as it will make historical pricing available, for US stocks at least. It looks something like that. If you want to learn more about how to trade stocks, check out my free starter guide. Download the free Trading Essentials guide. Good luck, Stefan.